Let's dive deeper into how blockchain ensures security. Each block contains a unique hash, which is like a fingerprint. If any information in the block changes, the hash changes too. This makes it easy to detect tampering. But what if someone tries to change the hash of a block? They would also need to change the hash of all subsequent blocks, which is computationally impractical. Now let's talk about consensus mechanisms. The most common one is proof of work, used by Bitcoin. It requires miners to solve complex mathematical problems to add a new block. This process is energy intensive but ensures the security of the network. Another popular mechanism is proof of stake, which is more energy efficient and is used by Ethereum 2.0. In proof of stake, validators are chosen to add new blocks based on the number of coins they hold and are willing to stake as collateral. This reduces the need for massive computational power and lowers energy consumption. Both mechanisms play a crucial role in maintaining the integrity and security of blockchain networks. Blockchain isn't just for cryptocurrencies. It has applications in various industries. For example, in supply chain management, blockchain can provide transparency and traceability of products from origin to consumer. Imagine knowing exactly where your coffee beans were grown or the conditions under which your clothes were made. This transparency can build consumer trust and ensure ethical practices. In healthcare, blockchain can secure patient records and ensure data integrity. Think about the convenience and security of having your medical history accessible only to authorized personnel, reducing the risk of data breaches, and ensuring that your medical information is accurate and up to date. Moreover, in finance, blockchain can streamline transactions and reduce fraud. Smart contracts can automate and enforce agreements without the need for intermediaries, saving time and reducing costs. These are just a few examples of how blockchain is revolutionizing industries beyond cryptocurrencies. It's a versatile technology with the potential to reshape various sectors, enhancing security, efficiency, and transparency. Smart contracts are another revolutionary aspect of blockchain. These are self-executing contracts with the terms directly written into code. Imagine a vending machine. You insert money, select your item, and the machine delivers it without any human intervention. Smart contracts work similarly but with more complex transactions. When predefined conditions are met, these contracts automatically execute, eliminating the need for intermediaries like banks or lawyers. This not only speeds up the process but also significantly reduces the risk of fraud. For instance, in real estate, a smart contract can automatically transfer ownership of a property once payment is made, ensuring a secure and transparent transaction. Additionally, smart contracts can be used in various sectors such as finance, supply chain, and even voting systems. By automating agreements and ensuring they are tamper-proof, smart contracts pave the way for a more efficient and secure future. Decentralized finance, or DeFi, is a rapidly growing sector that leverages blockchain technology to offer financial services without the need for traditional intermediaries. This innovative approach is transforming the financial landscape. Imagine a world where you can lend, borrow, and trade assets without ever needing a bank or financial institution. This is not just a futuristic dream but a reality that DeFi is making possible today. That's the promise of DeFi. At the heart of DeFi are smart contracts and decentralized applications, or dApps, which automate and facilitate complex financial transactions. These platforms are open and accessible to anyone with an internet connection, creating a more inclusive financial ecosystem that transcends traditional barriers. These platforms are open and accessible to anyone with an internet connection, creating a more inclusive financial ecosystem. For instance, you can earn interest on your cryptocurrency holdings, much like a traditional savings account but often with higher returns. Or take out a loan without the lengthy approval processes typical in traditional banking, making financial services more efficient and accessible. But how does it work? DeFi platforms operate on blockchain networks, ensuring transparency and security. DeFi platforms operate on blockchain networks, ensuring transparency and security. Transactions are recorded on a public ledger, reducing the risk of fraud and corruption and providing a clear, immutable record of all activities. Moreover, DeFi eliminates the need for intermediaries, significantly lowering transaction fees and speeding up processes, making financial transactions more efficient. The potential applications of DeFi are vast, from peer-to-peer lending and savings accounts to insurance and asset management. While the space is still evolving and not without its risks, the potential for innovation and growth is immense. The promise of a decentralized financial system is a powerful idea that could redefine the way we think about money and finance, offering new opportunities for financial inclusion and innovation. As more people adopt DeFi, we could see a shift towards a more open and equitable financial world. Where financial services are accessible to everyone, regardless of their location or socioeconomic status. Blockchain can also enhance digital identity management by providing a more secure and efficient way to handle personal information. Traditional identity systems are centralized and vulnerable to breaches, making them an easy target for hackers. Imagine your personal information stored in a single hackable database, where a single breach can expose millions of identities. The risk of identity theft is high, and control over your own data is limited, leaving individuals vulnerable and powerless. But blockchain offers a decentralized approach, giving individuals control over their own data and significantly reducing the risk of identity theft. In a blockchain-based identity system, your personal information is stored across multiple nodes in a secure and encrypted manner, making it much harder to compromise. Each piece of data is verified by the network, ensuring its authenticity and integrity, which adds an extra layer of security. This decentralized nature makes it extremely difficult for malicious actors to manipulate or steal your information, providing peace of mind. Moreover, blockchain allows for self-sovereign identity, where you own and manage your identity, without relying on a central authority, giving you full control. You can share only the necessary information with service providers, enhancing your privacy and security by minimizing data exposure. For example, instead of sharing your entire birth date, you can simply prove you're over 18, protecting your sensitive information. This innovation has far-reaching implications, potentially transforming various sectors and how they handle identity. From secure online voting to streamlined Know Your Customer (KYC) processes in finance, blockchain-based identity management could revolutionize how we interact with digital services, making them safer and more efficient. As we move towards a more digital world, ensuring the security and privacy of our personal information is paramount, and blockchain could be the key to achieving that, paving the way for a safer digital future. Another exciting development in the blockchain space is the concept of decentralized autonomous organizations, or DAOs. These innovative entities are reshaping how we think about organizational structure and governance. DAOs are organizations run by smart contracts and governed by their members through a consensus mechanism. This means that the rules and decisions are encoded on the blockchain, ensuring transparency and security. DAOs can operate without a central authority, making them inherently transparent and democratic. Every member has a voice, and decisions are made collectively. Imagine a company where decisions aren't made in boardrooms but through collective voting by its members. This shifts the power dynamics and allows for more inclusive decision-making. Each participant has a say, and the rules are coded into smart contracts, ensuring fairness and transparency. This coding of rules helps in maintaining a level playing field for all members. This eliminates the need for intermediaries and reduces the risk of corruption. By removing middlemen, DAOs streamline processes and enhance trust among participants. DAOs can be used for various purposes, from funding new projects to managing community resources. Their flexibility allows them to be tailored to different needs and objectives. Members can propose and vote on initiatives, and if a proposal receives enough support, the smart contract executes it automatically. This ensures that the will of the majority is respected and implemented efficiently. This level of automation and trust makes DAOs a powerful tool for creating more equitable and efficient organizations. They offer a new way to build trust and collaboration in a digital world. The potential applications of DAOs are vast. They can be applied in numerous fields, each benefiting from the decentralized and transparent nature of these organizations. They could revolutionize everything from corporate governance to social movements, providing a new way to organize and collaborate on a global scale. This could lead to more inclusive and effective solutions to global challenges. As blockchain technology continues to evolve, DAOs could become a cornerstone of the decentralized future, offering a new paradigm for how we work together and make decisions. The future of collaboration and governance could very well be decentralized. Finally, let's look at the future of blockchain. As the technology matures, we can expect to see more scalable and efficient blockchain solutions. Innovations like sharding and Layer 2 solutions aim to improve transaction speeds and reduce costs. Sharding breaks the blockchain into smaller, more manageable pieces, allowing parallel processing and increasing throughput. Layer 2 solutions, such as the Lightning Network, operate on top of the main blockchain, enabling faster transactions without compromising security. These advancements could address some of the current limitations of blockchain, making it more viable for widespread adoption. Imagine a world where blockchain technology underpins everything from banking and healthcare to supply chains and government services, providing unparalleled security and transparency. The potential applications of blockchain are vast and still being explored. As we continue to innovate, blockchain could transform industries, making them more efficient, secure, and equitable. The journey of blockchain is far from over, and its future holds endless possibilities. Stay tuned as we dive deeper into this digital marvel in our next segment. Why do 90% of tech enthusiasts rave about blockchain? It's time to decode this digital marvel. So, what is a blockchain? Think of it as a digital ledger, a chain of blocks containing information. Originally, it was designed to timestamp digital documents. But in 2009, Satoshi Nakamoto revolutionized it to create Bitcoin, the first digital cryptocurrency. Each block in a blockchain holds data, a unique hash, like a fingerprint, and the hash of the previous block. This chain structure ensures security. Tamper with one block and you'll invalidate all subsequent ones. But wait, isn't that easy for fast computers? Not quite. Here's where proof of work comes in. It slows down block creation by requiring significant computational effort, making tampering incredibly difficult. What about management? Blockchain uses a peer-to-peer network instead of a central authority. Nodes or computers verify new blocks and reach consensus. Tampered blocks, they're rejected by the network. To alter a blockchain, you'd need to control over 50% of the network. Nearly impossible. And there's more. Smart contracts are the latest development, automating transactions without intermediaries. Blockchain isn't just tech, it's a revolution.